Hello, everybody. Welcome back to Crypto Talks. My name is Phil. That's Rob. See, I got it right this time.
Well
And
done. Well
it's
done.
Monday, so we got TA Monday again. And I think this time we're kind of going to try to outline what we think will happen from now until the halving in April. Sort of. We're going to give you some arguments for a sideways move. We're going to give you some arguments for a downtrend potentially, or a potential uptrend. So we're going to see what we can find. I've been doing a little bit of TA just before we started here. I'll be honest, I don't look at the charts too often because that's bad. Because that means I have to zoom in, and that just doesn't work for me. I zoom out and then I keep it there. So let's get into this right away. I've jumped over to the weekly charts for this one, just to get a good overview. So this is the charts that we've been looking at for the past, year and a half, essentially, since we started doing these streams. And it looks the same. We haven't changed much. We have the fib level going from the bottom here to the top right here that we just hit. I just realized I missed that ever so slightly. There we go. And we like the fib levels because they are very good at predicting moves and good support levels, and they usually line up pretty well with tops and previous bottoms and stuff like that. So that's why we have that here. I'm just going to jump over to the daily right away because I just wanted to get that brief overview here. And keep an eye on this RSI, by the way. We're down under the, I guess, overbought territory right now on the weekly. So it's moving in the direction that we were expecting it to, which is back down a little bit, because an overheated week, the RSI tends to be a pretty good indication of a local top in the long term schematic, or whatever you want to call it. So I'm going to go to the daily, and I'm going to start with the argument for a potential downtrend. So the bad news first, I suppose. And what I've done is I've actually, I don't know why I didn't do this previously, but let's walk over to the previous, what do you call it? Pre-bull run right here. Back in,
Bull run.
well, I mean,
Yeah.
what would you call it, right?
Yeah. The
I'll zoom it out just a
mid-cycle,
tad.
the mid-cycle bull run would be
Mid-cycle, yeah, pre-bull run, whatever. It just sounds funny, and I like to use that. But okay, so I'm gonna do here is I'm gonna go to where we peaked last time, halfway through the bull, and corrected, and I'm gonna grab the bars pattern right here, and I'm gonna pull it just over here somewhere, and I've made this into a line chart so it's easier to see, and I'm gonna move this all the way over to where we are right now. And I'm going to zoom in. Whoops, that was not nice at all. And so what we're going to do, I'm just going to place this where we currently are. And I think I kind of messed that up a little bit. But what happens is it lines up pretty perfectly with not only the fib levels that we've drawn here, but also the trend lines. And it's obviously this, I'm not outlining what I know is going to happen. I just find it funny that something from years back is lining up with the same fib levels right now. Because if you didn't notice, the fib levels right here are the same. They're pulled to the same positions. So from the bear bottom to the pre-bull run peak, right? And the same is here, from the bottom to the peak that we had at 49K. And now this line here is lining up pretty much on the money, I would say. And I just find that funny because it's bouncing here on this red line, which is the fib, and then the 38K line that we drew, I think last week or 2 weeks ago, just showing off this kind of top here that we broke out of. So this is one of my arguments for the correction further down than we've been. We did bottom out here at 38.5, and we got a pretty heavy, bounce back up, but we're still stuck in this range, right? And so if we go down and do break this, eventually, maybe we'll bounce right like we did here, but eventually we might fail it. There is support above 32. 32 are our main support level. And I think 32, Rob, is still our main support, right? If there is a downtrend. And yeah, if we're lucky, when it does correct like that, we might correct down to this trend line instead, which would end up being around 33 if you follow this, the same type of downtrend. And what's funny as well is that this bounce right here, the first one on the line, is basically within a week from the halving, right? Because the halving, I think, if I remember correctly, is said to occur on the 14th or something like that of April. And that would be pretty funny for me if it lines up with the halving and just bounces on the day. I'm gonna be laughing because that's just gonna be funny to me. But yes, so that's the argument for a downtrend. That we get the same type of correction that we did last time, a few years back. That means the weekly RSI will have time to come back down. The daily here as well will have time to come back down and kind of sit there for a while at the bottom. And yeah, that's the downtrend. I don't know, Rob, if you have a good one for an uptrend, for example, before we talk about the sideways type move.
In terms of past history, I guess the only real comparison is to be the one that we've kept saying, which is that this cycle is a lot more like the previous cycle in 2014 to 2017 than it is the current cycle, previous cycle, which is that what we're seeing over time is this continually staircase upwards, and that was a very similar behavior that we saw all the way back in, say, 2016. If you can
get over to this one right here.
There you go. That shows it quite well. I was just getting it up on my screen, but yeah, you can see there. Just every time it was okay, it'd take a step up, it'd hit the top of a new range, it'd come down to the bottom, it'd have some sideways movement, and then it'd go up. Just these continuous reaccumulations, and these happen when people don't want to sell and people are eager to buy. And if the ETF FOMO does come through in a big way from an institutional standpoint, then it is fairly likely that we will see this kind of behavior where it doesn't matter what the prices are. If people want to allocate to this ETF, the ETF has to purchase, and they will do it, say, at the end of the day or in some specific manner that they'll arrange with probably Coinbase or some other large custodian. And these will be large OTC purchases that they will just take the allocation away from the market. And eventually, over time, that just pushes price up and up as the supply runs out at a particular level. So I'm not overly bearish, but at the same time, we should still remember this is Bitcoin, and 30-40% corrections were very normal in the previous cycle. 50% corrections have started to become the norm in this cycle, whereby every year we have at least one 50% wipeout. We didn't have one last year. We have mentioned, be wary of that. It's been a while since we haven't had a 50% drop, and even a 40% drop is basically happens every single year. So Bitcoin is pretty overdue for a fairly sizable correction, and that shouldn't surprise us. It's just Bitcoin things. And if we're accepting the fact that we're now a big fish, a small fish in a big pond, then we can expect this kind of volatility to carry on, albeit over a much longer, drawn-out sort of standpoint. Like taking this previous cycle and just plonk it to the bottom, and okay, yeah, I'm not expecting a. I don't know. That's only $1 million. We could do it, but yeah, it's
it's only $1 million.
Only $1 million, but something a bit more reasonable. It's like well, even if it you squiggle the line up and it kind of does sort of that.
Yeah.
I mean, okay, we'll take that, because if we take that and take it off the log chart and put it on the linear chart, that'd look pretty cool. That'd be pretty nice.
I mean, I'd love to see that.
Yeah, I'd like that. So we have to temper our expectations and remember that Bitcoin is already a large asset in terms of
it's bigger than silver.
Asset. Well, yeah, but and silver, silver is a big asset. So yeah, it's got a lot of size to it. However, if you look at the accessibility of Bitcoin and the reasons why people would want to hold it, and the sheer indisputable nature of its supply, it opens up an awful lot of upside momentum. So yeah, who knows? Maybe this chart will one day be filled with nice, lovely green candles just up and to the right forever.
I'm waiting for the day when, you know, when I got into the crypto space, on the line charts you could barely see the first, you know, giga pump on Bitcoin on the historic charts, and you know, now it's hard to see the previous one, and I'm just waiting for the day that when this bull run that we just had, when you can barely see it move on the linear, I'm waiting for that day. Like
so
that's one of my things that I want to see. Yeah, that's what I'm talking about.
so there was always I always like this video that stuck with me, and it's like, so there's this one time that Bitcoin, it went all the way from like $30 all the way down to $2, and then there was this other time that Bitcoin, and it went all the way down from $270 all the way down to $65. And then there was this other time that Bitcoin went from $1,177 all the way to $163. And so the lesson is never ever buy Bitcoin, because you know it's going to drop 90% or more at some point.
Yeah, it's like,
I mean,
do you know what that reminded me of? The way you spoke about that. I was waiting for you to say, this one time at Bandcamp.
same vibes.
Same vibes for sure. Well, yeah. So let's have a look at. I'm just gonna delete some stuff here from my charts, and I'm gonna see if we can pull out an argument for a continued sideways move. Because when we jump back to the weekly here, let's clean this one up just a tad. We've been sideways for, I think it was 9 weeks so far. It's like, I mean, you know, it's not been sideways, but it's essentially been sideways. When you look at it like this and you see the candle bodies, ignore the wicks and just look at the candle bodies. We've been ranging like that for 9 weeks, give or take, right? And you know, when you have a sideways move or consolidation sideways, or if you need a correction doesn't necessarily have to be a downtrend. And this is something that a lot of newer people tend to, you know, they start learning about corrections and stuff, but they miss out on the fact that a correction doesn't mean downtrend always. You know, a correction means basically a resetting of indicators, right? At least it does to me. Maybe people think I'm dumb here, but people use the indicators to tell them now it's time to buy, now it's time to sell. That's what people use them for, you know, at the end of the day. And looking at this here right now, you're seeing this sideways, but you're also seeing, you know, the weekly RSI right here. I'm using the RSI, by the way, as like the standard thing because it's one of the most used indicators of this kind, of this type, that shows you big moves up and down for a longer time frame, right? It's just easier to talk about. And it gives a good long-term picture. And so when you look at the peak for the weekly, it was on this green candle right here. Since then, we've moved sideways, and the RSI has dropped from 83.6 down to, at the very bottom of that so far, is 66. So it's moved down significantly already. And for, you know, if we have a sideways move, we could continue just to kind of range sideways like this until April. Then I think the weekly RSI might be able to move all the way down to the like neutral level at 50, which is where you tend to say, you know, you have a line, price comes down to a line, it might bounce on it. Or if it comes up to a line, it might hit its head on it and fall down, right? So for me, looking at this, if we're going to continue sideways, that is still a correction, right? And the weekly is where I think we do need to see the actual correction happening, or the consolidation. So we need to see the RSI coming down and cooling down, because once the weekly RSI has fallen back down to 50, which is here, this middle line right here, once it's down there, all the other time frames, give or take, like the significant one, which is the daily, is going to be at the bottom more than likely, right? Which means it's time for a lot of people to start buying. And there's not a whole lot of people that look just at the weekly. Most people, I would say, that invest, they look at the daily time frame, which is why I look there, which is why I think, Rob, you look there as well, to understand when the bottom is in and all these things. And you're never going to be perfectly accurate. It's not how it works. But once the RSI on the weekly comes down to 50, that is a pretty strong that's a pretty strong indication that, okay, it might bounce here, especially if it bounces, let's say, on this fib level, or even if we're lucky enough to see 32 again, which is this right here. It's lined up with this stuff right here and the fib level. And I'm saying if we're lucky enough to see it, because personally I prefer a correction downwards, which means you can allocate more cash, which is what I want to do. But yeah, that's my argument for the sideways move, and it just makes sense that we've found a pretty good range here between this top, which is lined up with this, and this fib level right here, which we've already bounced on once essentially. But so yeah, that's my argument for sideways moves.
Yeah, just to add one more thing to the RSI, if you just want to flip to my chart,
yeah, for sure.
You can have a look at the very long-term side, which is that there's a very sort of clear band that Bitcoin has with the weekly RSI, which says we're in a bull market or a bear market. And I've just drawn it here as 55 and 45. I've just set the oversold and overbought sections too, and this range has acted very, very well in the previous bull market as support. And when it did eventually drop, that was the signal that, okay, we're going to go into a extended bearish period. 2020 was a lot more volatile in that sense. We had the big COVID crash move up and down, but still, once we dropped into this band properly, that was the signal that the bull market was ending. And in this case, we've come down. We came all the way down to the bottom of it, and it's we've cannoned all the way back up to the top. So now we need to see, like you say, this sort of cooling down period and see if it wants to move back up. And that could take a while. It can take many months. So there's no guarantee of it though, because at the same time you can see any of these periods where the RSI can just go, you know what, I've had enough. I'm going to sit on this previous support line of 60-ish and go, I've got another high in me. Maybe that's an opportunity to put in a bearish divergence, make a higher high on the price, or at least a higher close on the price, but a lower high on the RSI. That would assist the bearish narrative on a midterm basis, and it would also line up quite well with what we saw in 2019 with a complete sort of drop off of the RSI, even though the price held on for a while. It was inevitable that this triangle was going to drop, unfortunately. So, well, unfortunately, not if you're wanting to have a nice buying opportunity later down. If you want bull market now, maybe there's a case for it. There's a case that it can just carry on going up exactly the same way as it has all year round. But have we seen enough correction yet? Well, we've seen some wicks. We haven't seen anything particularly scary, and I think this is a very good time to scare people. And so
I think we talked about that in the previous stream. We had a question come in. Sorry, but I can't remember exactly what it was, but we did say, if you think dropping from 49k to 40k was scary, you just put your seatbelts on and just wait, because
get ready. So there's this sort of range of these closes and wicks and price levels for. There's quite a lot around this 29 to 32k region. I'd like to think that it's going to hold somewhere up in the 30s because of this previous support level.
That's pretty heavy
support here. I'd hope that held as support, but there's no guarantee, and also, yeah, there's no guarantee it even drops that far because, as you say, if there's buyers and there's no sellers, price isn't going to go down. So
Yeah.
it's a no trade period. Ultimately, it's a DCA period. I think if you were holding on for a significant period of time, waiting to see what was going to happen, well, we've had a period of time to correct. So have you started to allocate if you have allocation to make? Because there's no guarantee you're going to get these low prices at the same time. There's no guarantee it's going to just fly upwards. So be ready for those lower prices in case they do come, and make sure you do have capital for in case you get that gift. Because a lot of people find that when those truly low prices come, they already bought 30-40% higher or 20-30% higher yet, and it's then a waiting game while your bags are sat in a hole. That doesn't mean you have to time every bottom precisely, but you can still look at, as we're showing, very reliable indicators, or indicators that have been reliable in showing this behavior and saying, okay, I'm going to wait for it to come down at least to this mid-range band before I think about allocating a big chunk. But in the meantime, while it's correcting and while everything's cooling off, well, yeah, you can nibble, you can add small amounts.
Mm-hmm.
That's there's no one correct answer of doing this, and being in it's very, very hard to sit on your hands and do nothing when a 20% correction has come, and that 20% corrections have been as much as you've got in the past year. So that's kind of so far what we've seen. We've seen a fairly strong bounce, and this is a very bullish candle after what was a very bearish candle. Yep. So again, it's mixed signals. This the chart is not telling us really anything at the moment. We now have room to go up on the RSI. We have room to come down on the RSI. Not really telling us anything at the moment. If I just add a few other indicators, MACD on the weekly is coming down and crossing bearish. Now that isn't something that has a good history, depending on how big the rally was. So if it's had a big rally, this tends to have a very big effect in that you kind of see, if we go to where we have the cross here, and that corresponds to here, and we can kind of see the analogy to where we're at now.
Yep.
But conversely, we also had, we've had a big run towards the start of 2023, and this bearish cross here and here could have been taken as very, very bad signals that, this is going to come back down. But actually, both of them were, well, the first one anyway is a decent buying opportunity.
Mm-hmm.
So you can't put too much faith on the oscillators resetting, because they have to just just the fact that they come back to neutral and the MACD crossing downwards doesn't mean that everything's done. It just means things are cooling off and momentum's dying off. There can be a fundamental reason for momentum to come back. So patience, but also vigilance. If you've made a lot of money in the last year and you've got bills to pay and you are struggling to pay them, don't be holding on to something that can drop a significant amount of money. It might be unpopular to say. I know it's very unpopular to say in crypto, to be like, actually pay off debts and be responsible financially, and don't just degen everything into Bitcoin. I mean, do that if you have the capacity, but don't overextend yourself, because if you're struggling to pay the bills every month and you've got something that you've made a lot of profit on, then I'm not saying sell it all, but I'm not saying do anything. But
but I mean, I want to add something to that too, as soon as I can. But I can do it now. Okay, sure. Sorry to interrupt you, but I mean, if you're struggling to pay bills, in my opinion, I question whether you should be attempting to invest short term or even long term at this point in time. Like, if you're struggling, taking away, you're just making it more difficult for you in your daily life, in the hopes that something will go the way you hope in investing.
Yeah.
And it's just, it might be a boring thing to say for crypto enthusiasts and everything, but looking at it from a standpoint of like, what's more important, getting more Bitcoin, or making sure that you can actually pay your bills,
Yeah, well, so there was a something, a little exercise I did with my friend who he didn't have a lot of debt, but he had some debt, and he had a little bit of crypto, not a lot, but he had a little bit. And we actually sort of sat down and I had a look at it and said, what you've got, and this is what you've got as your crypto, and this is what you've got as your debt. And it's like, how much interest are you paying on the debt? And when you looked at the interest and went, okay, what is the interest per month as a percentage of your crypto holdings? And it was about 2 or 3%, I think, per month. So it's like, you have to bear in mind that that's chewing into your holdings. And as much as it's great to say, okay, I'm going to hold this and this thing's going to do a 20x, if it goes sideways for 18 months before it does that, if you consider how much interest you've paid on that debt when you might have had the capacity to just pay it off with crypto and start, just rebuild the pot with that saved interest, you end up in a much healthier financial situation, and you still end up with a bigger bag long term. And it's just, people do need to be patient and not don't treat it like a casino. You have to be willing to lose. And if you're betting money in the casino that you can't afford to lose, then you are going to get burned, and you are going to end up in a bad place.
Yeah. Yeah, I agree. So we actually had I'm just going to show. We had a couple of questions here. I'll just show this one first because it was just funny. Pay bills and then the rest of crypto. I mean, yeah, why not?
Maybe feed yourself as well in the process.
Yeah, I mean, food is fairly important.
Reasonably so.
I know that there are people out there that eat once a day. Just
Hello.
because, but look, no joke, eating once a day, intermittent fasting, if you're doing it on purpose or if you're just doing it by happenstance, it works. It's actually quite good for you as well, according to research. So just don't take anything I say in regards to that as some kind of medical advice or anything. But yeah. And so,
don't worry. There's plenty of people peddling nonsense on the internet about health that I think we'll get away with it.
Yeah. So we had a question that was directly directed to you, Rob.
Yes,
but I want to open with just something for this, and then I'll let you kind of add to the argument, because I think you're probably going to say about the same thing as I will. So the question is, do you see a dip below 15K as a possibility? As under 10K seems like it will never happen again. And obviously you're talking about Bitcoin. Short answer, no. And I'm going to add this to the stage here and hide this. So I've actually added one of our indicators that Rob has built for us. And this is the bullishness index right now. And before we get into that, I want to show you, just rest your eyes on this. What we did was we copied that part of this downtrend to say we might see, a downtrend down to 32. In this instance, the correction was even deeper. It was all the way down to 6.6K, and that the copy thing that we just did was down to 8K, give or take. One of the big reasons to why I think we're not going to go further, meaning we're not going to see something like this and do the same thing like we did last time, is actually, now that I see it like this,
very nice.
now that I look at it this way, it actually looks quite nice. But my argument was going to be, there is so much more. The market is so much bigger now, so deeper corrections are going to be less. Corrections are going to be less violent, I think, overall. Yes, we're still going to see big dumps of like 50% here and there, but this correction right here, if it goes down there, it would be 40% on Bitcoin. That's pretty heavy, but even if it still corrects all the way down to that, or even down to this fib level right here, which is the next one, which is the same as it bounced on here, which is the 0.5 fib level. If it corrects all the way down to there, we're still looking at 27.6 essentially, and so 15K in that respect is very unlikely to me. The golden pocket, which is the 0.61 and the 0.65 in between those, that's a golden pocket. That's around 23.5K. Deeper than that, we're seeing 20K over here, and then even deeper. That 15K is like we're gonna double bottom the bear market. I'm personally having a hard time seeing that happening. And I don't know about you, Rob, but I'm pretty sure you would agree.
I would certainly agree. And
yeah,
you just have to look at it in terms of percentage moves. If you just want to flip over back to my chart, then you can see if we look back at 2019, 2020, from the peak all the way down to the bottom, including the wicks, was 71% on the BLX. Yep. To get down all the way to that bottom was 68%. So that's what, to get back down to where we've already been is 68%. We would need a COVID crash from here to get back down there. Now, we've already had 2 years. We've already had a 70% correction. We've had a long period of bearishness to and shaken out that bearishness. And so I'm not sure at this point, whether we've got enough Bitcoin simply available that people are willing to sell in order to push us down to 70% from here.
Yeah.
40 to 50%, I think that's less likely but reasonable. 20 to 30%, I think, is kind of standard correction for Bitcoin nowadays, unless something fundamental happened. So if you take 20, you take what happened here in previous cycles, then we can look at the previous drops of, well, okay, blow off top drop, 70% or more for most of the year. What was it? Where did it drop down to? There you go, 70%. You can kind of look at the capitulation as another drop, which was the stock market dropping off. So, okay, one was a fundamentally crypto event. We blew off top. Or you could say the launch of the CME futures. Here, you can say, well, the stock market collapsed. That makes sense. Here, we had pretty much the biggest crypto scam in history, the Plus token scam, which a lot of people never heard of, but it was huge in China, and this contributed to this run-up. Was a lot of Chinese people buying Bitcoin in order to participate in this ICO, and it was basically a scam, and these people stole the money and started offloading all these Bitcoin, and so Bitcoin dropped a long way. The COVID crash, this was the last, I think, test for Bitcoin, a 60% drop in a matter of a month or a month and a half. And this was the test that, can Bitcoin recover from this? Is this something that the world actually wants, or is COVID going to end the world, and by proxy, the fact that Bitcoin would be unable to survive a drop, and that we would have this doom spiral that people were very commonly talking about, this doom spiral in 2018, and then more about the halving. We always get doom spirals about the halving. But yeah, these were fundamental events. Another one was the China mining ban, a huge outgoing of Chinese miners, and we had a drop. And then, of course, we had the bear market, which consisted of tightening of liquidity, causing a nice, normal, healthy correction of 50 or so percent. And then we started to get the liquidations.
Yeah, the Black Swan events and all that stuff.
And these were simply events that had to happen because we needed this leverage shaken out of the system. We needed all these bad practices to be removed and wiped out, and now they have been. And moving forward, now that we have an institutional grade investment asset like an ETF, it's an awful lot easier to avoid this, because if I can have ETF shares, well, if I can say, here's my proof that I own these shares, well, and I can borrow against them, well, then DeFi can actually take a far more, I'm going to say this word, responsible step, in that it can cater to institutional clients that don't take outrageous risk. Of course, some institutional clients will take outrageous risk, and that's why we get blow-ups intermittently. So yeah, it's very rare that Bitcoin drops 50% without a really, really good reason. And
Yep.
by that, we've talked at length about all of the problems facing the global economy. And if the Chinese housing market decides that it's going to crumble and collapse and wipe out 30% of Chinese GDP, I wouldn't put it past Bitcoin to see 15K. Very, very briefly. Like, I'm not talking about a sustainable price. I'm talking about a COVID crash style event where you had a matter
It's
of
just
hours.
a blip.
Yeah, you had a matter of hours to buy it under 6K. I remember that night I didn't sleep at all night. I was sat watching charts and I had to go in the next day because I was not going to miss that. I was watching with like, yay, I can make some money at last. But it was scary as hell to be part of. But if you woke up in the morning, you looked at it, you just saw the wipeout, well, yeah, congratulations, you missed it. It wouldn't matter. You could still buy Bitcoin at 5,000-6,000 for several weeks afterwards. And that was a great purchase in its own right. So we should just be wary that if an opportunity like that comes along, well then, quite frankly, if it turns around that the Chinese housing market is completely collapsing and we're going into a global recession, I'm gonna probably sell everything except my Bitcoin. That's the
pretty much the same here.
That's the realistic fact, is that although there would be likely some downside volatility, because as we've mentioned many times, the market cannot price in forced sellers. If you are being margin called and you must sell your position, you will sell your position. Futures contracts, it's all planned in. You will get liquidated and your position will be sold. So that can take Bitcoin down an outrageously long way in a very short period of time. If you can catch those wicks,
great.
Just be grateful, and don't panic yourself about catching the absolute bottom. If you saw Bitcoin, Bitcoin right now decides it's going to fall off a cliff, and we start to see it at 32, 33K now, I'm going to buy some. Am I going to go buy with all my power? No.
Yeah.
Because I'd expect a bounce, and then I'd expect a retest, and then a bit of more retest, and I'd want to see some strength. I want to see some uptrend. If it then drops lower and we see 25K through some miracle of liquidation, I'm not going to panic that I bought at 33. I'm going to be happy that I managed to get a decent amount at a decent discount, and then I'm going to buy it again.
Yeah.
And then once those drops have happened, and it looks like it's all of that leverage has been wiped out of the system, that's when you consider adding leverage, if you are that way inclined. You don't try catching falling knives, especially with leverage, and that's the problem that myself, I can account to blowing a huge amount in April 20 or May 2021 during the big drop, because I started adding on the way down and I added too soon, and I made a decent chunky loss out of that one.
Well, it is what it is, right?
It is what it is. That's it.
Take the lesson as a snowball in the face. Well, and that's it. So I did want to show off the your bullishness index thingy. So Rob made this indicator, and I just wanted to kind of finish with this, and we'll respond to Tokibusa's question there after this. But and I just realized there might be drawings here, but that's fine. I'm gonna remove those. So the bullishness index here, it's kind of giving you, as when you're closer to the bottom here, it's kind of indicating to you that it's safer to get in. It's not like here, buy here type thing, but the closer you are to the bottom, it's kind of telling you.
The more it's telling you buy here.
So like if you're down close to the red line and you're getting a good buying opportunity from other indicators, maybe there's less risk for you to get in there, if that makes sense. And the same comes up here. Like if you're above the green line, it's fairly risky to start buying here. So maybe this should tell you to start kind of thinking about getting out. And that's kind of what that shows. It gives you a. Actually, why don't you explain it? You made it.
Exactly. So that being said, you can see that area in 2021 there, where if you sold based on this indicator, Yeah, that was not a good decision. You'd have sold way too early, and you'd have missed a big chunk of rally. But what I like to see is this is a combination of a lot of indicators that interact and form just one. You can see it as like this is how the market is averaged in terms of how bullish or bearish it is. So to see a spike of ultra bullishness, well, no shit, there was a spike of ultra bullishness. We finally broke out of a 3-year range. What was more telling is the fact that when we were up at 65, 70k, that all of the indicators were basically neutral. The market was not saying we're bullish. The market was saying, yeah, okay, we've not got any momentum either way here, and yet the price has done 20x in a matter of 2 years. So you can look at it as a kind of tool to say, okay, how far is the momentum deviating from the price? What is the overall situation of the oscillators? And it's good to see bullishness on oscillators. I wouldn't necessarily jump in and buy straight away, but as you can see, as we have right now, you had this spike in the every oscillator turning bullish across the board, and now we've got a situation where we're below 50, so we're actually leaning a bit more towards the bearish camp. Now, does that mean that we're oversold? Well, no, we're not oversold. You see these areas, these spikes down to 30, which give us those really definite long-term buying opportunities. We can obviously go lower than them again, like we did in 2022. That doesn't mean that it's not a good buy, and nobody can predict the future, especially some oscillator that's completely dumb and doesn't know anything on the chart except the numbers it's given. So there's a lot of I'd see this as the bullish spikes are definitely be wary positions, and when it comes back into neutral, if the price is going vertical, then think what that means. It means that all of the oscillators are completely, right now all the oscillators overall averaged out are neutral. In a bull market, you want to buy neutral. You don't necessarily want to wait for oversold, because it may never come. If you're lucky, it comes. But if we go back to 2020 and 2021, there was a long time before this came down to the 30.
And I'll say this the way that I personally use this, because I like to look at indicators and I like to compare it to my own TA and see kind of like how it plays along with my type of TA. And this is what probably you should be doing yourself as well if you're using new indicators, and find how it matches up with your own stuff, right? But the way I look at this is, we've seen these bottoms here, right? And those line up with these bottoms fairly well right here. And now we're seeing this bottom right here, which is this. It's not like you're gonna definitely buy as soon as it gives you a V shape. But as you can see, like we're currently in a uptrend right here, and the bounces that we've seen along the way have been around this area, right? In the bear market, right around here, you've seen the bounces all the way down at 30, and so the same thing over here
are up, just poking the head above the 50, almost a mirror image.
And so basically what this is saying is that, when it's under here, for me it says pay attention and see what's happening with the price with other indicators. But this is a really nice way for me, at least, to say, if you look at the previous peak where we had over here, where we copied the whole price range right here, and then we bottomed out down at 30 again, the price was all the way down here. And right now, if we go to where we thought that it would go, that would line up with basically where we are right now, right here, around 40 something. And so we're already there, is what I'm trying to say. It's like it turned very quickly down on this one, because the peak was actually, let me see if there we go, up here. That's where the peak ended up.
And so you can see there is a perfect example of a strong bearish divergence. The indicators are all cooling off, but meanwhile we made a higher high on the back of what? ETF launch news. Yes, it was so the indicator right here told you this is not a good buying opportunity as it pushed up towards 48, 49k.
Exactly. No, so why isn't it working now? That's annoying. That's very, very, very annoying. There you go. No, so yeah, we're seeing the same type of thing right here. The only difference is that this was more of a blow off top. This is more of a subdued pump up that we've had in the past year and a half ish, or the past year. And so for me, this indicator is telling me that we might see a deeper correction down here. We might see that 32k, but there's no guarantees, obviously.
Yeah, and if you do see it, the main thing is don't panic, because as you can see, and this is what the indicators can be used for as well, is like, okay, well, what's probably going to happen next? And if we did get a drop down there, then yes, this would be saying 30, and historically that's saying it's a great buying opportunity. Even if it does take another leg down, it's probably not going to drop miles further. Okay, yeah, a COVID crash event could happen. For me, a Chinese wipe out the housing market or something, some other similar black swan, that's going to do it. And if we did see prices down that low, well, hope you've got some money left. That's the sort of thing where you kind of see it and you go, okay, everything's going to get dragged down. You sell everything. Like I say, I probably sell everything except my Bitcoin, and then I'd just wait for very, 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 very large drops in price, and
that hopefully come.
Well, yeah, that's it. But if you know the fundamental shifts, if you know that there's something like that, if you can see institutions failing, if Evergrande has now been told that they have to liquidate, if we start to see Chinese housing market, companies go bankrupt week after week, it's kind of inevitable that something's going to happen, and either they start churning money out immediately, in which case, sweet, buy it, go on, buy assets because it's money printing forever, or they let it crash first, and normally it starts crashing before they turn the money printer on. So you can generally see the big picture, and we like to keep everything a bit big picture, and it's a scary time. It's the days of easy money and easy investing are over, and you've got to have your wits about you, and there are going to be periods of time where even in the bullish case, bad things happen and prices drop, and they're going to drop sharply and heavily, more heavily than you expect. And just don't panic, and remember the long-term thesis, because nothing changes. If Bitcoin drops 20-30% in a day, it's still going to keep producing blocks, and that's all it's promising to do, nothing else.
So I wanted to just finish off with a question from Tokibusa, which is this one. What are your thoughts on Vanguard not allowing access to the Bitcoin ETFs? I think you're trying to say. I think this is something we kind of want to get into like tomorrow, for example, but because it's more of a big picture thing. However, my initial thoughts when I heard about this is, why would you do that? Like, if I was the boss at Vanguard and I had many customers, saying, oh, we want to get into Bitcoin, and then they say, no, we're not going to give you access to the ETFs that trade Bitcoin. They're shooting themselves in the foot. Like, you want to be in early if you want to be one of the big players in this. I mean, I don't think the Vanguard is going to have a problem being a big player in that space when they eventually do let that, the trading, what the ETFs will be available through their platform. But it's like, why wouldn't you want to be in it right away? I know that on Twitter or X, it was a huge, at least just for a couple of days, it was a huge storm with a lot of crypto people basically boycotting Vanguard for not allowing people access to the ETFs. And that hype or that thing kind of died down in just a couple of days. So people have already forgotten it, basically.
It's not a big deal for me.
It's not a big deal as such, like for the crypto space. I just feel kind of, why would Vanguard make that's a bad business decision? Like,
I just feel sad for him,
Yeah, I feel sad for them
It's
too.
just sad for them. Yeah.
Yeah.
No, it is. It is. I think it's a bad business decision. Maybe they are just being cautious, and they're looking at it going, okay, we're a bit wary about what the volatility risk is, how we're going to allocate, because with such a volatile asset as Bitcoin, it's quite difficult to actually purchase, and it's something we have mentioned. It's hard to buy 1,000 Bitcoin every day, because if I've clicked buy during the middle of the day, and then all of these Bitcoin gets added up at the end of the day, and I hit market buy, what happens at that point in the day? Everyone just starts front running you, and they push the price up, and so you end up buying the Bitcoin consistently at a higher price than you want to. So maybe then you've got to look at, okay, do I buy dips under TWAP is a time weighted average price, which is a reliable way that institutions use, where they buy whenever it comes down to a certain average. That's very difficult if everyone is doing the same strategy, because it doesn't come down to that, because everyone front runs it. So there may just be purely sort of administrative or just risks that they're looking at and going, we don't think we've got the infrastructure or the mechanisms to purchase the amount of Bitcoin needed to fully service our customers. It could just be a very sensible decision like that. Or
Could be.
they could be giant raging pussies.
Well, I say the latter. But so what I do want to do though is this super quick update on the ETFs. Now that I already have it on the screen, here's the market cap of the ETFs altogether. It's growing, not super fast, and yesterday and today we don't see yet. Or sorry, we're not seeing the full one for today yet, but it's up at 30 billion in total market cap for all the ETFs right now. And IBIT that's BlackRock, has 70,000 Bitcoin now. What's the F one again? Fidelity, yes, has 62,000 Bitcoins under management. So like they're all growing slowly and steady. The GBTC sell-off thing is like we said in the previous stream, is kind of gone. People are not selling. The FTX sell-off is gone, and now there's just growth, essentially. More money coming in, and I think every month, I suppose we're gonna get that kind of like a chunk coming in from people by allocating a little bit from their salary every month, just chuck
people
dropping
people
in.
that can,
yeah, the people that can. And so it definitely, for me, this is most of what's going to go into these is going to be in there forever. There's going to be people are going to buy, they're going to hold it for a long-term investment, because now that type of investment is available for the mainstream normies.
And even if they don't, even if there's not the demand there, they could follow the GBTC strategy, which is that they accumulate Bitcoin, they continue to accumulate Bitcoin, and then if there's not the demand there, well, then they just let the shares sell for a lower price than the asset value, and people will then be enticed into that over the long term, because they're getting cheaper Bitcoin. And if the longer these ETFs are trusted and the longer they're seen, then any discount would then be eaten up. So yeah, there's it's just looking good for the long term in it. Let's just face it. Yeah. Let's just face it. This demand is not going anywhere. I would be very doubtful if these strategy, these funds decide to offload large amounts of Bitcoin simply because it got sold. Because what they'll do is they'll say, okay, sell the shares, but sell them below the net asset value. Take an effective loss on the Bitcoin.
Yeah, that's
weird. Because if it depends. If you need to take profits, it's not. If And quite simply, if Bitcoin's trading at 120k, but the ETF is trading at 100k because people are withdrawing money from it, well, so be it. It represents one Bitcoin, or a claim on a certain fraction of Bitcoin. It does not have to follow the current Bitcoin spot price.
Yeah, and I mean, honestly, of course, these big managers and like, of course, they want to have Bitcoin ETFs. Just having I think most of them have around 0.25% fee. But if you have a fund that's worth billions and billions and billions and billions of dollars, taking 0.25% fee on that's printing money for you, right? And so, yeah, it's just more players are going to get into this game as well. So accumulation.
And the institutions will just exactly. This is the institutional opportunity for them to gain Bitcoin and hold it in their. They are not going to want to sell this Bitcoin back to the plebs. They're not going to want to give it back to us. They want to take it from us on a long-term basis because that's how they can control the asset better.
Yeah,
and
I'm thinking for tomorrow's Macro Tuesday, we could actually dig into how an ETF works. If that's something that's interesting to people, because we have been getting some questions around the whole ETF situation, both in Discord and on Instagram and Twitter and all these things. So we might dig into that. That's actually quite a good idea, I think. But with that said, we've been running for almost an hour now, and we need to start rounding off. And so, if you like this content, leave a like, subscribe, share this with everybody, especially people that don't understand it. Do your part in orange pilling the world, I guess. We'll do our part as best we can. And enjoying the Discord if you haven't already. I know everybody who's been commenting today, I know you're already in the Discord, and we are looking forward to seeing you in there once we end this stream, because we're going straight back in there. And with that, I think we'll see you tomorrow, and yay stuff.
Yay.
All right. Cheers, everybody. Bye.